Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. He's speaking to us from the Chicago area. I hope you had a great Independence Day, Eric.
Yes, I did. Thank you, Jim, and thanks for having me back.
The equity markets, what are they doing right now, and why might you be nervous about it?
Well, I think we discussed it last time we were talking, and just this time period in July through October, maybe a little broader, July through November, when I have discussed this decennial cycle and how if you look at the last, I trace it back 16, 17 decades, but during those decades, the 7-year and 8-year of each decade are when the equity markets have most consistently seen sharp drops, anywhere from 20 to 25% up to 40 to 50%, a couple isolated incidents, I think even exceeding that. But it has been, like I said, very consistently in this July through October, July through November period. And even when you look, even in recent years, the two most significant corrections we had in the market, the biggest one in the last 5 to 7 years, was in 2015, and the majority of the sell-off was in July and August, stretching into late September in some of the indexes, but it was right in that same third quarter of the year period. And prior to that, in July through October of 2011, you saw really the most significant drop between 2008 and 2015. So it's a very consistently negative time frame, and there have been many other corroborating factors. You know, that particular pattern I will certainly treat as one factor that I'm looking at, but I need to see the synergy of multiple indicators and cycles and patterns pushing me to the same conclusion before I will give it too much credibility. And you're really seeing that in a lot of the equity markets, where there are signs of a peak coming. Really, from a price perspective, the 1 to 2 year upside objectives that I have listed over the last 6 to 8 months were in the NASDAQ wasn't as synergistic of a target range, but it was up, pushing up to the, let me get my numbers right here. I know the Dow Industrials was up around 21,600, and the S&P was in around 2460, and the NASDAQ, was up around 5,600. Well, the NASDAQ already reached that target, and now in the last few weeks, right as we were hitting the end of June, beginning of July, the Dow came within less than 0.5% of reaching its 1 to 2 year target, and same thing with the S&P, came within less than 0.5%. So you've got these major upside price targets being fulfilled, you've got this longer-term historical pattern, but then there are some pretty convincing weekly cycles and weekly indicators that are showing signs of rolling over to the downside, and I just need to see a couple more confirming signals to really raise the confidence level there that, yes, we're going to see a pretty substantial sell-off in this third quarter.
Is there already a big sell-off in the high-tech sector?
The NASDAQ certainly had a sizable, I think it was around 5% in June, sell-off, and that could be the canary in the coal mine, the thing that's giving that early warning sign, although even before that, you had the Dow Transports giving a decent correction from early March all the way into June, something that looks kind of like a first wave down, even though the rebound could easily retest the highs, and I think it's getting close to there. That wouldn't negate the fact that we could be in store for another even more substantial decline in the coming months. So you've got a couple of noteworthy indices that are certainly giving reasons for pause, for some caution, but nothing yet that has signaled an all-out reversal pattern, although a couple of the indexes are getting very close. So, even within a few days or a week or two, you could see these signals generated, and that would be a reason to look for a sharp drop. And you go back even over the last couple of years, often the lion's share of those declines, sometimes 80 or 90% of them, occur in just a few days. And 2015 is a perfect example when you look at that second half of August, where 80 to 90% of the drop in many of the indexes occurred just in 5 to 7 trading days.
I was just going to ask, will we see a black August 25th again?
I don't know. If I'm kind of looking for a little bit more of a sequence of some substantial sell-offs, maybe each one not being as big as some of these previous examples, but building to a crescendo a little farther down the road, even stretching into early 2018, when I've got a specific time frame that I'm watching for the bottom of a 6 to 12 month correction. So I don't know. A lot of times when you have just those quick blow-offs, that's more corrective in nature and shows that you're still in an uptrend. It was just a sharp sell-off and profit-taking, and the uptrend resumes. Whereas a true downtrend will do it more in stages, a little bit more surreptitious at first, kind of a stealth bear market taking hold, and then when it finally becomes obvious is when you see that real blow-off to the downside.
We'll have more with Eric Hadik right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Eric Hadik. Eric, the grain markets, how are they doing?
Well, they are into this time frame now where I have kind of detailed, along with this 40-year cycle that I've documented so much. And one facet of that 40-year cycle was the repeated occurrence of food crises. And I kind of use that umbrella term, but not to try and imply some global famine or anything, but that on a very consistent basis with this 40-year cycle, you've seen serious crop stresses, and usually it hits at least a few crops, but it's resulted in often exponential moves up in the price of many of those crops, and in particular grains. And what I have been detailing for a couple of years here is that I thought we would see the period from 2017 into 2021 really repeating that pattern, and that it wouldn't be surprising if it looked a little bit like 1977 through 80 in a lot of your grain markets, where you saw many of them doubling and tripling in price over that time period. And there were some crop stresses. There were even economic with the dollar taking a pretty big hit and having a real inflationary environment there in the later 70s. Each time it's a different sequence and a different trigger mechanism, so you don't look for an exact repeat, because if you do, while you're sitting there watching paint dry, hoping for one scenario you're expecting, all of a sudden something comes out of left field and still ends up giving you the same result in the price charts and in those commodities, even though the fundamental driving factor was something different. But I have been looking for mid-June to really be the turning point for soybeans, corn, wheat. That soybeans had a lot of weekly and monthly and even year-to-year cycles telling me to look for a major bottom in mid-June. Some corresponding cycles stretched that into late June, but anywhere between the 15th and the 30th was these longer-term cycles telling me to look for a bottom. And I've detailed a lot of that in several reports and newsletters over the last year or two. But we seem to be seeing some validation to that scenario with the grain markets turning up sharply. I even kind of updated and detailed some of that analysis in my July Inside Track. But for me, it's what I believe the first step in this, what I think will be some serious crop stresses over the coming years. And wheat seems to be kind of at the forefront of that right now, with a lot of droughts in the northern Midwest, and really hitting the crop there, becoming more recognized in recent weeks. One of the things where wheat was concerned, I did think we could see a sharp spike up in July, and you might even get a multi-month peak in July, but that doesn't mean that it's anywhere near the current prices. It could be much higher. There's some targets that I'm watching that will really help clarify that for me, but that's kind of the lead grain at this point that has really seen a pretty sharp spike over the last couple of months, but even more in particular over the last couple of weeks. But as I said, I think that's just the first shoe to drop where commodity markets are concerned, and I think there is going to be a dollar factor to that a little farther towards the end of the decade, and just a general inflationary aspect to that whole thing too. So in the coming years, you could get a perfect storm of factors really spurring higher prices in specific commodities.
We'll have more with Eric Hadik right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Eric Hadik. Eric, do you expect to see any major action in crude right now?
No, I just have to keep coming back to the same thing that I've said since early 2016, and that was that I thought we had to have a 1 to 2 year bottoming process before crude could really start to recover from the damage that was done in the mid-2014 to early 2016 plummet. And that what I've been looking at this year, there were two time frames when I thought we would see the significant lows, like 2 to 3 month lows, and then the second one being even longer term, but that was in early May, and then in the September-October time frame, which is starting to hone down to a more specific period. But we saw the sell-off into early May. We saw some consolidation. Now we're starting to break through those early May lows. And the next objective for me is that September-October time frame, and that's when I think we'll see a really major low, probably above the early 2016 lows, because they fulfilled some multi-year and multi-decade cycles and wave targets that I had. So I think that this impending low will be a secondary low compared to January of 2016, but probably lower than any other lows since then, or since we rallied to an initial peak and then started to sell off. So I just think that you'll see some whipsaws, you'll see some spurts to the upside when different news comes out, or like most recently, I think it was Russia came out and said we're not going to go with any deeper cuts, as some of the OPEC members were hoping for. And so all of a sudden, oil's taken another swoon, and that's just to be expected until the timing is right. Like they say, timing is everything, and that's why I am such a big believer in cycles too, because they reflect a lot more than just some mystical time frames. It's natural progressions, and in a market like crude, when you see such a sharp decline and you think about all the ramifications that play out where production is concerned, and the different exporters, and right in the middle of that you had Iran coming back online, and there's a lot of capacity and production that needs to be moved through the market, and something getting to the point where either demand picks up and finally exceeds that supply, or a supply disruption that's unexpected and is a little bit longer term than just a couple week glitch in one particular region. And so I think that the timing is getting close for that. So I am going to be watching for signs of it, because sometimes those bottoms come a little bit early, sometimes they stretch a little bit late. That's why I also say that price action has to be the ultimate filter. That's got to be the thing that drives trading strategies and drives entry and exit points. But I think we still have a little bit more of this volatile consolidation, but we're getting closer to that time where a secondary bottom is likely to take hold, and then a more sustained advance start to develop from that low.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim. My pleasure.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.